a trading battle together coming up in a couple weeks, bringing that back. So I'm excited. I'm helping them a little behind the scenes with trading battle this time around, which I'm really excited for. Anyways, up next, guys, Chris Pulver. I got to run. I'm about to pee my pants, so you don't want to see that. So we'll leave you with Chris Pulver. Stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. Happy Friday. Welcome back. Bitcoin had a great run yesterday. We are nearing all-time highs. I still think bulls are going to have to temper expectations. We'll probably end up topping out around the 108, 109 level. If this is going to be accumulation, just don't be terribly shocked to see resistance. Change the color here. To see some resistance happening. We have some inefficiencies these last couple of rips. So pullbacks are probably going to happen. But it's nice to see some momentum. And this is helping. Coinbase is up quite a bit. Ethereum is possibly getting a break on the right-hand side of the trend line. IBIT has made a nice run. I've got covered calls at 62. I'm not trying to get them called away. And then MicroStrategy is up over $400. Gold and silver. Gold's still kind of range bound, which is totally fine. We get more accumulation. We'll start identifying some lows to scoop up some more exposure. At least I will. Ideally, I'm looking for something around 3,000. We probably have to see a dollar move in order to see gold have a big play. Silver to me still looks good. I tried to find this chart this morning. If I go XAG, XAU, it doesn't pop up, but if I go XAU, XAG, so the gold versus silver, what I thought was interesting on this chart is just take this as the inverse. Okay, if I did an inverse here, and this might be wishful thinking, but would it ever be possible that silver ends up getting strong enough to move down here or move down here? Maybe. Right now, gold has outperformed to, I'm trying to think where this really peaked. This peaked around COVID time. But after that, silver got a lot stronger post-COVID versus gold, at least performance-wise. So, I'm wondering if we end up having another, maybe a peak where gold gets to the point where it just outperforms to the level that silver is going to catch back up. And I wonder what that performance looks like. I still think they're both good. I'm just looking to see on the chart for silver, going back to these, highs in 2011 and these highs in 1980. I'm hoping that silver will continue to make a run, looking for some resistance to break. Once this resistance breaks, this is something I want to continue to run with to the upside until silver's trading, hopefully in the 40s. So I think that could be pretty good. So I like silver and I like gold. Currency strength chart for today. Japanese yen a little bit stronger, a little bit quiet on the volatility side. We have New Zealand weaker, CAD weaker, dollar weaker. Let's go dollar index here on the chart DXY. So dollar yesterday had a decent pullback. Oops, I need to go dollar index. If you're zoomed in, let's say 4-hour or 1-hour chart, if you are just so anxious to sell the dollar, that's probably a good spot to be watching. We're hitting resistance on the 4-hour chart right now, right around that 200 moving average. Also, previous levels of support to become resistance. So I could see this area as a tempting sell, but we can still pull back to this trend line. So kind of area 1, maybe letting it gravitate back here towards area 2. That'd be a sell around current price. Just off this 101 level, and then right around this 102 to 102.50 zone. So I don't think the top is necessarily in on the dollar. The daily chart is still back and forth, but I don't want to see the suckers play, which is, we break this trend line and people are trying to sell that. It's like, yeah, we might go a little bit lower, but I could see this area still putting in, some trappy choppiness, and then eventually this does become like a bigger sell trade. So I think a pullback. I mean, just take this full swing. We haven't had much of anything as far as a pullback. So pulling back into this area, pulling back to where this aggressive candle was, backside of the trend line. There's a lot of resistance up here. So I'm still patient on the dollar related pairs. If anyone's getting antsy, like I said, Aussie dollar, if you're trying to buy it, it's just not a shallow pullback to me. That's way, way, way too shallow to buy. Euro dollar. This one, if you had a chance to short kind of this choppy area, a break, retest, and go. I mean, that was okay. Let me see what this level is here. It's about a 113.70 down to 112. I mean, it's 170 pips. It's not bad. Again, still though, it's such a shallow pullback that maybe another pullback, another push lower, and something like this. But if you are short euro dollar, taking some profit in the 30 to 38 to 50% zone, probably be more safe than sorry. Pound dollar still choppy at these highs. UK and US are looking like we're inking a trade deal. Is that one of many to come? It's possible. What's the stock market going to do? I spent a lot of time yesterday talking about, S&P. I still expect there to be. I hope there's a dip to buy. I mean, that's kind of what I'm wanting to see. Just it would make sense to feel like buyers have a chance to participate in this, this V bottom. And to get that, I mean, I'm not sure what the catalyst is going to be to drive prices back down, but I would hope that somewhere in here, we talked about this a little bit yesterday, but somewhere in here on the S&P, that this would be an area to be looking to buy. So somewhere between 550 and 530 on the SPY, 5,500, 5,300 the S&P. If this is going to be, this isn't necessarily the top, but if this is a head and shoulders pattern, left shoulder, head to neckline, right shoulder. Now, you're going to have to be courageous enough if you want to trade the right shoulder. You're going to have to be courageous enough to see, is this a bottom that I can trade? If you start taking some bites right here, I would keep it defined risk just in case the market decides to go a little bit lower. This would probably be the more disruptive move is if we come back and revisit April lows. I think Trump and co probably don't want to see that. So anyway, but a lot of them are close, right? We have this high for the pullback in March. We've been squeaking out towards that 570 level on the S&P. Here are the Qs, kind of the same look, right back up towards these March pullback levels. If we have a left shoulder, head to neckline, looking for a pullback on Qs, maybe 470 down to potentially, 450 or so. This one's a little bit wider, a bit more volatile. But yeah, I could see, 470 to 450 offering up some dip opportunities to get long. And eventually, if and when we break this neckline, and maybe this takes the summer. We had a wild and crazy, 3 to 4 months trading since, Liberation Day, post-Liberation Day, April 9th, the market's been recovering. And if the market is forward thinking, if we can get past the worst of this trade nonsense, or there's more clarity on this trade war and these global tariffs and how the U.S. is going to be positioning itself with the world, then the market, may be able to price this in. But it might come at a bit of a pullback first, which, like I said, I'd be totally happy with. Okay, I'm watching the S&P slump into some fresh lows in the morning. So we are seeing red in the S&P, red in the Nasdaq. The Dow is red. Russell is red. That's fine. I mean, I'm fully expecting a pullback in this market. I'm no longer, I did a synthetic short last week on Friday into this week's early trading. I'm now just kind of hanging out, sitting on the sidelines. Let me go. Let's go SPY. I'm just going to check some of my levels here. Maybe a 560 level lights up. Go down another $3-4, but I'm not seeing a huge level yet. That run up to 570 yesterday worked out pretty nicely. So I had a butterfly spread yesterday, and that paid out pretty well. That was a 22-cent debit. I ended up closing it for 50 cents. So pulled over 100% on that trade, which I was pretty happy with. My Russell campaign for IWM is going well. I sold the call at 200. It's out to next week. If we're at or below 200, I keep all that premium and I'll sell it again. I'm looking at rolls right now on Tesla, which is trading up to 301. I'm going to let this run a little bit further over the weekend and then see where this starts to trade at next week. I'll probably just keep rolling. Maybe it's a couple of dollars a week, but as long as price is still running higher, I'm going to roll my calls. MicroStrategy, I still have some shares. Not ready to roll this one yet. I do think that Bitcoin is going to face some volatility, so just be on the lookout for a pullback on Bitcoin. If you obviously see a run like this, it's very possible that the market's going to pull back. Example being, we had that post-election break. There is an inefficiency. What did price do? It rallied, and then it spent the rest of the time coming back to find what? That inefficiency. So I just see that price action playing out where this probably gets checked and this area probably gets checked. So if you're interested in buying dips on Bitcoin, that's not a bad spot. This to me is a better spot. This is a better spot to be looking long again, between about 90 and 87,000. Another spot to be looking long and see if we can get back up to these highs. Okay. If it does get up to the all-time highs, that's fine. Just expect a pullback. Hit some highs. Everyone can celebrate. Oh, Bitcoin all-time highs, and then we'll pull back. Most likely we'll pull back. What else? Let's check some non-US. Japanese yen, FXY is the Japanese yen, EWJ sitting near these highs. DAX up to some fresh all-time highs on the German ETF or the German index. Fez up to all-time highs. FTSE didn't really move, even though they, this US-UK trade deal. Argentina creeping up there. China still green. Brazil looking pretty good. Now we're back up some fresh highs off these recent pops above the 200 moving average. Latin America, same thing. Nice little surge. So we are about 6% above the 200 moving average. I would say that old Latin America is getting into a buy zone with some room to run. You look left on this chart, $25. Look left, $28. Look left, $30. Look left, $32. Let's cheer on some Latin America. MAGs. A lot of resistance here around this cluster moving average. So we're at the 200 moving average, a little bit of indecision happening right now, which is fine. This is kind of the same thing. Could this be setting up for a bullish head and shoulders? Sure. Could this run, a little bit hotter into this resistance area? Yes. Either way, if it was offering a pullback in here, I probably get some exposure to MAGs. If it pulls back to lows, I'm going to be getting some exposure to MAGs. So I will start adding this one back into the portfolio. I was long MAGs. With everything else, I was picking ratio spreads on individual stocks. I was long MAGs around $41 when we had that basically a huge run up to $45, $46. I took profit. So it was kind of like a 1 to 3 day hold. But then, high or low, and we did push into the 200 moving average. I didn't participate in that second bit. Apple, just hanging out around $200. Amazon, I've got an earnings play that expires today. Unfortunately, it's not looking good. It's right in the middle. I need to see if price could get to the expected move, and it didn't. Earnings was right in here. I was really it was good earnings. It just didn't do anything price-wise. I didn't see any major volatility in Amazon. Broadcom making a nice run above the 200 again. I participated in a ratio spread. That was about it. That was my trade on Broadcom, so no exposure after that. Google had some bad news this week on basically Apple going into an AI search versus a Google search. I still think Google, I would hope for everything else that it does, is still okay. So I'll keep an eye on it, obviously, but I don't want to see Google go too much below the April lows. I like to see a hold about that 150 handle. Meta, 595. This one would be a great range trade. Meta would be a great range trade if we come back to like $500. Maybe a bite there. If it goes any lower, I really like Meta in the 450 or lower. So I'm considering even, certainly dollar cost averaging. If I want to put a couple $1,000s into it, that's a nice discount. But also some income trades and ratio spreads and 1-1-1s and things like that with options. So could be wishful thinking, but if we pull back back below the 200 moving average? Is there any momentum to get back down to these lows? If so, cool. I'll probably take a bite with maybe a $1,000 or $2,000 allocation into anything in this yellow zone, $1,000 or $2,000 allocation, and then my target would be, Meta get back to all-time highs over the next couple of years. Microsoft has just been ripping through earnings, and all the ratio spreads worked out nicely. All the 1-1-1s worked out nicely. Allocations are in profit. Netflix starting to top out a little bit. Nvidia also had a nice run. Trump had a late day announcement, I think on Tuesday. Maybe it was Tuesday. Had to have been Tuesday. It wasn't FOMC day. Had to have been Tuesday. Anyway, it was something about, they're curbing AI chips, and they're kind of repealing something that the Biden administration had put in place. And this was the surge on, actually, I guess it was Wednesday before the close. That's weird. Anyway, that is Nvidia. Let me make this, move this back down to 130. 130. Okay, Tesla have back above $300. This might get traders excited, breaking this resistance zone on Tesla. I'm sure, Elon Musk is a little bit happier, but Tesla's fairly volatile. It's a highly traded stock now. I mean, I saw more options traded on Tesla than on the SPY, which is ridiculous, but good for Tesla. So if we got a lot of traders getting long, that's cool. I wouldn't mind seeing a pullback. If we have a break above this level and a pullback, I still want to be selling premium on the ownership that I have. My trade that I closed out this week, it was a 1-1-1. I closed out, I think it was 284, closed it out for like 13 or 14 cents. So took most of the profit there. So 284 minus 14. So took about 95% of that max credit. That trade closed out for profit. Now I just have the 257.50s and the 277.50s that I'm rolling week to week. Berkshire, don't want to call the top in this one, but if we end up coming back down to the 200 moving average or so, this is probably a good spot to maybe add some exposure. It's still an expensive stock. I don't plan on doing much with it outside of maybe dollar cost averaging. Okay, SPY at 563.40. Looking like we're breaking some fresh lows intraday. 560 starting to light up a little bit. Got any directional trades? 560 might offer up a winner. That would be from, it's still like a $7 move on the day. There's also a gap fill around 561. That would be from the 7th of May. If we officially fill that gap, that'd be around 561.31. So I'm watching this gap right here. 561.40, 561.31, right in there. Let's go back to bonds. Well, shaken not stirred. Bonds. I think this is a bit of a buyers / scalpers arena. If you're scalping bonds, the issue is it's certainly not something I would want to hold. I did some work yesterday on TLT. Let me check and see my Pulver alerts if I have. So this week, Pulver alerts. Let me see if I've got a TLT trade running. I know I had a diagonal spread. I'll walk you through what I'm doing on this trade. So I'm trying to reduce my exposure to TLT. So here's what ended up happening. Here's just one example. I've got this on everyone's accounts, but here's just an example of how the breakdown is. So I had a July $96 sell call against my long 65. So the math works like this. I had a January 15, so this is a 1/15 of 2027 65 long call. Against that, I've sold several calls. So a March call I sold against it. Okay, so basically I got into the trade. I think my debit's around $20 right now. Let me go into my tracker here. All right, so let's go to TLT. All right. So, yep. So I sold against this in March. So the way this first started was a 331.25 91 sell call, and that closed. And then I did a 430 expiration 92 sell call, and that closed. And then I did a 731 expiration 96 sell call. And what I did is I just rolled that down in price and reduced time. So now I have a 530 expiration 89 sell call. So my net debit is 20.82 is my net debit. So if I take the 65 long call plus the 2082, that's going to equal 85.82 would be my break even. Okay, 89 is my sell call. So if TLT is greater than 89, then I'm going to get this diagonal spread called away for profit. Okay, so that would be what, $3.18, $3.18 profit per contract if price is above $89. The reason I'm doing this is I don't think that the bond market is going to be this big rip to the upside, because that would mean that we'd have to have a risk-off environment. Right now, I don't think the Trump administration is going to want to see a further test of a risk-off environment. You know, they try to flex their muscles. They basically broke the bond market. They're backpedaling on the tariff, the tariff situation and the trade war. I mean, Trump is doing everything he can essentially to jawbone the economy. He's also trying to talk down the Fed and say, look, they're gonna cut rates. They should cut rates. They shouldn't cut rates because yields aren't going down, and the Fed cutting rates is not going to make yields go lower. It's not going to make yields go lower. So I don't know if Trump understands that, but he needs to stop talking about it like he is in control of making the Fed do something that he says. I think Powell, with Wednesday's press conference, he addressed a lot of uncertainty with trade policy. That things are looking better. There's resiliency in the U.S. economy, but I also think that the Fed could see some runaway inflation if we start to see the yields go higher. So I think their job right now is to sit and do nothing, and I think they're doing a great job doing that. If they do start cutting rates in July, I have my concerns with how effective it's going to be. I don't think yields come down. I really don't. Yields may not go up, but I don't think yields come down. So point is, I'm reducing my bond exposure because if we're not going to see really a real risk-off environment, then I don't see the bond market being something I want to own. There's plenty of other income to generate trading indexes or trading ETFs that are index correlated. Way more premiums on this versus the volatility we've seen in the bond market. So summary is this. I've 96 when TLT was ripping, I'm like, well, heck, if this thing's going back to $100, let's try to take advantage of that. But now that we've seen a huge collapse in the bond market, yield sticky, I am just hanging out like, yeah, I'm just trying to get it called away. So there's going to be some fluctuation in TLT. I'm using obviously expirations that are much closer to current levels. So I've got a chart alarm set at 89, chart alarm set just above 90, and I'll just keep rolling the calls. So the nice thing is only going out a couple weeks at a time. I'm just going to keep chipping away maybe 20, 30, 40 cents. I mean, contract wise, I have a decent amount of TLT exposure. I think for everyone's accounts, when it's all added up, and let me add this up. So I've got 2, 4, 6, 8, 12, 16, 18, 22, 26, 28. So I have 2,800 shares represented with my contracts in TLT. If I make $3.18, I mean, I still make $8,900 on TLT without having to really need price to go anywhere. Price just stays where it is. I can keep selling calls. I've got plenty of time to do it. I'm out to 2027 on this trade for the long side. But as far as generating income, I don't want to have the bond market be something that breaks, or see the market if we're going into like a risk on environment. I don't think that's really going to favor the bond market going up. Risk on, more than likely, risk on in equities is going to mean possibly pressure in the bond market to push it lower. Okay. But I think that yields are something to watch right now, because if the TLT, for example, doesn't really go much lower than this area, then we probably jump around a little bit. Look at your US 10-year, kind of the same thing. US 10-year, it probably jumps around a little bit. We may not get above this high. We may not get above this or below this low. We might just be choppy here on the 10-year yield, which is okay. Like, the Fed doesn't do anything, so there's no reason for it necessarily to be drifting higher. But like I said, my concern is that what happened last year happens again, which is Fed starts to cut. They may not do the aggressive cuts like we saw back in September last year when they cut 50 basis points, and the market thought that was a surprise, even though it was on every economic calendar. But if the Fed starts cutting, let's say another 50 to 100 basis points in these next 12 months, does this go up another 50 to 100 basis points? That can't be a good thing, and maybe the equities market doesn't reflect that, but that's going to put a lot of pressure on the bond market. So time will tell. Okay, mortgages, average mortgage still around 6.76. I did a lock at 6.6. I'm actually kind of happy with that for right now. It's not great, but it's manageable. And if we do see anything that changes where rates do come down, if I get a 1% improvement, then I'll refi. That's probably about as good as it'll get. I think it's going to be really difficult to see, sub 3% mortgages maybe in the next 10 years without having some type of major crisis. It's possible. I mean, hell, we could have a major asset bubble all over again, and maybe it's a 2008 2.0. But until that happens, then I don't think the housing market's going to do much other than let supply side catch up and drive housing prices lower. Okay, let's talk currencies. I've got some China plays in here. Alibaba still sideways. I should have some covered calls expiring on Alibaba and Baidu coming up pretty soon. Let me check these really quickly. So Baba, I've got some shares of Alibaba. Baidu, I've got a decent amount of exposure. I have some shares. I took a lot of my profit on Alibaba with this rip up. Let's go back to Alibaba here. So when we had this run, I took off most of my profit on the long shares. When this came back down, I didn't reestablish a new trade. Um, I just didn't. It actually hit my measured move. If you go back to my chart here, like, this was my plan, is to try to get swing to swing, and that level was hit and exceeded. So by the time we got to like 127, 128, I was taking profit. Would I want to restart? I mean, I think Baidu looks a little bit better as far as reward to risk. I just want to see this thing catch some love and try to get back to like 116. So my covered calls have to be coming up expiration wise pretty soon. Yeah, next week. So 95 covered call. I've got about 77% of that credit. I'm probably going to leave this uncovered. I mean, it's tempting always to like add more covered calls. But if the stock has upside potential, which I think it does, getting too aggressive, I mean, especially with the ability to run, $5, $10, $15 in a week, there's no way that a covered call is going to be able to give me the profit that I want. So I'm better off letting this thing hopefully have another surge to the up and considering like a 105 exit, or maybe up here towards 115. The nice thing about this stock is, I think if I gave this one enough time, if we can sort through this US-China trade war stuff, I think going through, I don't know how long it takes, but I think this could be $150 to $160 stock. So my ownership price is around $80. So, I mean, of course, I'd love to have some exposure there, where a stock that I have, a fair amount of shares. I don't know what it is. It's probably over 1,000 shares. Let's ballpark it. So 150, 230, 20, 150, 131, 100, 131, 131, 150, 40, 20, and 20. So 1,274 stocks. If I can get, let's say, $80 a share, or $80 a share, that's a lot of money on Baidu portfolio. So, is it going to happen this year? Probably not. But even if I could take a fraction of that, I'm still looking at turning a profit, and hopefully a big profit. So that's one of my willing exposure trades on China is, I like Alibaba, I like Baidu. I think there's some good technical upside to both of them. K-Web, the other one I have is JD. This one at 33.91. I still have some calls on this one out to $40. These are coming to expiration shortly as well. Robinhood. Are you serious, dude? Do not get back below $54 today, Robinhood, you piece of crap. What's JD right here? Covered calls next week. Yep. So these are going to expire also next week. So I'll be adding those to the mix as far as some additional prune trades, adding some more covered calls, maybe letting it run uncovered, but we do have earnings coming up next week. So hopefully JD pops on earnings. I don't really want to cover it unless it's after earnings and it's positive. I think I have a downside protection. Got naked puts on this one as well, up about 6%. This isn't bad. But I sold these puts way, way down there when price was elevated and volatility was really high. This wouldn't be a bad winner though. About 60% wins on the max credit. Anyway, so I'll keep an eye on that one. Schwab dividend, fine. Schwab growth, fine. If you want to play, I've talked about this the last couple of weeks. If you want to play Nasdaq in a cheap way, SCHG is not a bad way to trade it. If you want some non-US exposure, SCHY. Trade Europe, trade China, or Asia. So that's not a bad dividend. It's not a bad. We got dividends, growth, and non-US. That's a nice way to kind of diversify for this year. I'm playing those out with some owned shares. How many stocks above the 50-day? Well, we just had a run up to about 67% of stocks above the 50-day. Now it's pulling back a little bit. How many stocks are above the 200-day? About 58% of stocks are below the 200-day moving average, and we got about 42% above. So we're still kind of in that no man's land. A lot of stocks kind of retracing, correcting back to the 200 moving average. Will that act as resistance in the near term? Nasdaq above the 50-day has had a pretty nice recovery as well. Do you remember talking about timing the market down here? It's one of now many examples where if you're paying attention to this NDFI, this is how many stocks are above the 50-day. When this thing is beat down to a pulp, it's a good time to look to buy. So if you're courageous enough to trade in a high VIX environment, you can get rewarded pretty well with these reflexive moves. Timing the market 2023, timing the market 2022, timing the market during COVID, timing the market now worked out pretty well. Like literally this thing flagged a trade. In my opinion, this was right here at this like April 7, April 8th. Like that was the bottom. I don't know what other timing indicator you want, but that was pretty darn good. So between NDFI, S5FI, same thing. You had a opportunity in that 2 or 3 day window to be long. I mean, nobody knew that Trump was going to tweet and talk about, great time to buy and the market's going to rip up, 9%, 10% in a day. But that timing indicator for a 30-day window was pretty darn good. Costco, fine. Walmart pulling back a little bit. I've got some shares on Walmart playing defense. Nike, fine. I've got some puts on this one. Home Depot still waiting. If we come back down to fresh, not fresh lows, but recent support levels. Lows, same thing. MasterCard. Consumers are still pretty darn resilient. My MasterCard, Visa, and Amex trades actually worked out pretty well. Closed out these ratio spreads for profit. Johnson & Johnson. Actually, this one I can close out today. CB I can close today. I'm up like 98% of the max credit here. So CB, here's an example. So 111-111. And this account, 111. There. So I pulled in $2.01, $2.01, $2.01. I'm up 99.8%. I mean, I should be able to close this thing down for literally like a 1 cent debit. Let's see 10 cents debit. I'm going to keep the profit. So this expires next Friday. I doubt we're coming all the way back to, 215. So I'll just let this expire next week versus closing it now. I don't want to lose $10 on it. Might as well keep it. But good trade on CB. What else? Palantir, just off the highs. We had an earnings play where earnings was positive, but a gap lower, trying to fill that gap. This could be a little bit of a top, hitting resistance, gaps lower. I could see some major profit taking on Palantir. Again, another one to just watch a big range. If Palantir came back down to these lows, I'd love to get some more exposure there. I put in a ratio spread. I'm willing to own some Palantir. If we come down to some, high volatility, I will sell some cash secured puts as well. Similar to what I did this year when we were, dipping hard in February and March. This thing turned, aggressive in February. So when we were falling aggressively, I was selling puts. We bottomed out in April. I had ratio spreads. Those worked out okay. Carvana also resistance. Don't be surprised if this one has some resistance. If it came back down to these lows, I would maybe, leave a dip. I think Palantir is probably a better stock overall than Carvana. CRM for Salesforce. O'Reilly kind of topped out here. I looked at a call condor trade that would have been pretty nice. It was a high risk to low reward, which I didn't love, which I didn't take the trade. But still, top was in. Redfin sideways. Zillow. We had earnings this weekend. Zillow still pretty quiet price action. Uber. So we had earnings on Uber. We had a miss in revenue, but stock price hasn't done much. I still have a ratio spread here. I think I took profit on that. I don't have running in the portfolio anymore. Nope. So I'm just going to be patient. I do have some shares of Lyft. Oh, hello, Lyft. That's freaking sweet. So Lyft is now crushing it, and that's a great little move there. So Lyft, where are you? There we go. About up $6 grand. Lyft. Got a lot of shares, and my put is pretty much worthless. So I could probably just bail on that put. But yeah, I mean, I added a lot of shares on Lyft around $11.79. Let's see if this thing gets some legs to the upside. I would be excited on, I mean, even a miss in revenue didn't matter. It's like squeeze to the upside. So hopefully we are heading back into, $18, $19, $20. To me, that's good enough for profit. I'm not looking to hold this thing long term. But if we get back to, I mean, maybe at the conservative side, maybe a lower high. But I'd like to see if we can run up into, maybe another $1 to $2 of gains. And I'll probably take some profit. So it'll be close. That's not too bad. So how many shares do I have total? 100, 100, 200, 200. So 1,600 shares. If I get another $1 movement, right? So it'd be another $1,600 on top of the 61. So 6,100, another 1,600. Yeah, if I'm getting close to like 8 grand, I might take some profit. Also, before I just dump the shares, I could also just sell a covered call on everything and try to get a little extra premium as well. So if we come up to, let's say, 17 and change, maybe I can throw on like a $17 or $18 covered call, grab a little bit more premium, and just let it get called away and kind of juice those profits a little bit. So nice little surprise on Lyft. Sector-wise, I think XLV is the only one that I have right now. This is healthcare. I've got a ratio spread on healthcare. I did some energy as well. I mean, I wouldn't mind doing some puts on energy, but I don't think I have it. I think the only sector I have is XLV. That's it. And then I've got Pfizer. We had the pharma tariffs announced. Funny how the market just had all this crazy wild news this week of like, hey, tariffs on pharma, tariffs on Hollywood. Good time to buy this. The market's going to skyrocket. It's like, just, I guess you want to listen to the president. He's telling you what to do. Maybe it's that simple. Maybe we truly have an insider right now who is president of the United States just telling us what to do. And Pfizer, man, let's go currencies. Currency strength, anything surprising? Not really. Still pretty quiet on the Forex side. Japanese yen strong today. Aussie CAD. I'm still long Aussie CAD. If we get a pullback to 87.50 or so, I'll probably buy some more. Aussie Swiss. Still waiting for a better bottom. If it just melts up to the highs, that's fine. I'll take some profit. I've got my break even down here towards around 52.87. Aussie yen. There is a trend line here. If you had the ability to buy that August 5th bottom and not get beat up too badly from that flashy move, we could also be putting in a like this low. Could realistically give us some type of structure pattern where the Aussie yen does come back to these highs. If we have risk appetite, I think on the right hand side of this trend line, Aussie yen does look like a swing trade to the upside. Aussie New Zealand, I am still long on this one. Aussie dollar, I'm waiting for a deeper pullback. No trade. CAD Swiss, I'm still long. Here's my break even around 6,100. I'd like to consider maybe some profits up here on the conservative side, but if we go maybe a move like this, this might be seen as one swing. So this is one swing and then a pullback, another swing. I'd like to be taking profit up here towards around 63, 6,400. So I'll hang out for that one. CAD yen, Swiss yen, leave those alone. Euro Aussie, no trade. Euro CAD. I mean, if you're willing to hold this one, I think we get back down to 54. Euro Swiss, I'm holding on to this one, trying to get back towards 96 and change. Euro pound, no trade. Euro yen, no trade. Euro New Zealand, same as Euro Aussie. I'm just staying out of it for right now. Euro dollar, if you're short, I'd say at 111.50 to 110.50 is a good profit target if you're short. Pound Aussie, in the near term, if you're going up to this level, maybe you're on 2.1, taking some profit. If you're long, pound CAD, I'd wait for some confirmation here, but if we come up to highs, this is a good resistance zone to look for rejection. I can see pound CAD hitting some resistance at 86, 8,700 and selling off. Pound Swiss, I still like this trade if you're, long in here, targeting this pocket or this pocket, still have some upside of about 200 to 300 pips. Pound yen, pound New Zealand, pound dollar, staying out of those. New Zealand CAD, I'm still long. I'm looking for a dip. If we have a pullback into here, I'm looking for a swing trade back to the highs. New Zealand Swiss, break even, so I'm in profit. Potentially a short-term profit level here, but if this gets up to a swing, pulls back, I'm looking for a three-wave move. I'll measure that symmetry, end up taking some profit. These are all buy stops, by the way. These have not been filled. So if we are going here, here, and here, I'm going to take all these buy stops, cancel them, and probably just dollar cost average into another swing, and try to make this position a little bit bigger, trade that up into symmetry, and then take a nice chunk of profit. I don't think I'm going to hang on to this thing up to 56. Three-wave symmetry is good enough for me, but I'm still waiting to see, maybe we come back down and revisit the lows, but I'm looking for that bottoming pattern. New Zealand yen, maybe keep an eye on this one in case we break a trend line. Same thing as Euro Aussie, maybe, or Aussie yen rather. If we come up here and have a bottom, like a bottom head and shoulders or bottom crown, maybe this is a risk on trade, right? I mean, if we put in a low, a swing trade, it's like as long as we don't take out this bottom, then this trade should hopefully hang in there and maybe fight through this 200 moving average and get back up to range highs. So not too bad. New Zealand dollar, pulling back a little bit. If you're, eager to dollar cost average, stay small. Trade 1, trade 2, trade 3, trade 4, like kind of level into it. I don't think we come necessarily lower than this level, so that's good. So, but if you trade small, even getting into open space, any higher highs would look pretty good. Dollar CAD, finally starting to see some more movement. I'm not in dollar CAD at all. This area is very noisy. So, if you're long dollar CAD, okay, cool. I don't love it as much, so I'm just stay out of that one. Dollar Swiss, ish, kind of a comeback, maybe, not really. Probably better on the right-hand side of the trend line. I'm looking to see if I can get my dollar Swiss back to 8,800. If I can measure a move here, let's say this is, down, pause, maybe down again, look for some divergence. We start to get a bottoming pattern, and I'll trade some type of symmetry trade, back to like 88. If we get back to like 92, awesome. I'd be a huge profit back here as well. But I'm just kind of patiently waiting and riding out some of these Swiss pairs. Dollar yen, same thing. As long as we don't do too much damage below this low, this could still be choppy, but still resilient enough to get back to like 148, 149. It might also surprise everybody to the upside and come up to like 155 or 156. But if you're long dollar yen, this is probably a safe way to be at least eliminating risk. If it goes higher than that, yippee skippy. Okay. Any charts, any requests for today? S&P is still kind of, everything's kind of red just a little bit, just barely. So, flat on the day. S&P is literally at 0, NDX at 0.03, Qs are flat, Dow is down 0.2, Russell down 0.06. So overall, like still pretty quiet. Yeah, just a quiet Friday. I'm okay with that, in all honesty. I'm creeping up to that 200K mark again, which is where my high for the year was 205. So I'm up about 193K and hopefully able to cross, 205, 210 income trades and things that I'm looking to participate in. I saw a lot of cash looking to deploy. I'm just trying to find good opportunities. But yeah, we'll see. Doing my best to just keep taking good trades. So any requests, any charts, I'll give you a couple minutes. But that was all currencies, indexes, US, non-US, Bitcoin, gold, silver, oil, a little bit of everything. But the nice thing about what I'm seeing right now in the market is, let me go back to here's SPX in the day. If we go back to the bigger picture, is I'm a little bit more encouraged to watch this area for a dip. If buyers have been left behind because they didn't time the market very well with that April sell-off, I do think that buy the dip if we're offered up a pullback. This could be seen as a good entry to then get back to this neckline, break this neckline, measure this move out. We hit all-time highs. I'd be less likely to sell. If we hit all-time highs, I'm less likely to sell. So I'm just hoping we get a chance to participate in what could be a dip to then make a run to higher highs. And of course, then this resistance becomes support and we could run into, I do think we're running into like a big old bubble at some point. But it's the same crap we dealt with since 2018. We've had bubble after bubble after bubble. Market goes up, it crashes, works its way back up, crashes, works its way back up, crashes. I mean, this was the peak in 2018, crash, 2019, crash, 2020, crash, 2022, bear market, right? 2023, 24, 25, crash. So we just keep going in these wild and crazy phases. We've technically had like 7 bear markets in 7 or 8 years, based on the market correcting at least like 20%. That's crazy, but sign of the times, and I guess that's the new normal. So, all right, gold. Yep, we did gold earlier. I think gold's just range bound. So if you're a perma buyer on gold, be patient. I haven't added a single trade to gold. I'm still holding the long-term trend. I still have a lot of GLD running. If gold pulls back to, I like 3,000 a lot. I like 2,800 a ton. I just don't know if I'm going to get much more than just a little consolidation here. So if you're getting eager to trade gold, like trade it small, a couple levels, and we're probably still heading up to highs. If the world is making a rotation away from the dollar, you're probably going to see it reflected in gold. I think the only the issue that gold has as far as headwinds is if these stock markets are going to go higher. If stock markets go higher, if Bitcoin goes higher, I think gold probably loses a little bit of its bullish momentum, because this was running based on fear, right? This is running based on uncertainty. So I think if we get a little bit more risk appetite in the markets, you're probably going to see gold go sideways, if not pull back. Oil, your guess is as good as mine. Oil, we're holding this April 9th low. I just think if you're looking at gold or looking at oil, honestly, maybe like another strangle trade. I don't love doing this because it's undefined risk, but gosh, I feel like just selling some premium or some iron condors on oil is probably better than anything, just because I don't know what it's going to do. Like, I don't know if it's going to be choppy in here, but I would just have defined risk. If you could pull in 30% of the width of an iron condor, that's not a bad trade, but it's still kind of range bound. Pakistan, yeah, or don't trade it. If you don't want the exposure of any type of war conflict or OPEC or Saudi Arabia, U.S. supply gluts, don't trade oil. It's challenging. I did add some trades here, so we're back to 1893 on UNG. I might end up rolling this thing. I actually, for another one, income wise, I did this yesterday, so I now have a diagonal that's a 5x19. I'm up about $700. It may get called away. This is May 21st, but I'm also going to roll this a little bit if I can. I'll try to roll it a couple of times if we're making a run back above 19, 20 bucks. So initially I had this up to 23. I rolled it down to 18, 19 to get some credit. I can roll it out again. I've got plenty of time on the long side of the trade, but we might just be sitting here looking at choppiness around the 200 moving average. The Tesla run, I think this is probably encouraging. Tesla up above this resistance at 295 looks encouraging. I certainly don't like buying highs on Tesla, but you never know. So what I do have is I have shares of Tesla. I'm selling calls. I've got ratio spreads. I'm not crazy bullish on this because unless the markets are going to rip, I don't think Tesla just runs all by itself. But I will say that if we just, even if we go sideways here above the 200 moving average, I'm just going to keep selling calls against what I own. So but position wise, I do like Tesla. I mean, we're through a terrible earnings season. The market's recovered off the April 8th bottom. And, on the right hand side of the trend line, after the stock is down 50+%, I mean, we're probably pulling back into this area to maybe the 315, 320 zone. That's probably the next level of resistance. And from there, I would hope we have a pullback. If we have a, break, retest, and go find some support resistance, maybe another pullback in here, I'd love a chance to scoop up some Tesla, maybe 270, 280 again. And that'd be more of like a core position to see if we can get a run. So, Tesla is a highly traded, very liquid stock, tons of options. So I don't mind it. I think on the right-hand side of the trend line certainly looks better than, everyone hates Elon Musk and people are vandalizing Teslas, and it's, just treated like it's just sentiment. It was a sentiment-driven stock, but starting to recover a little bit. Okay, I think that's it for me. I'll wrap it up there. Have a great weekend. See you, everybody. Take care. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.